Next up, we have Tag Oil and Toby Pias. Welcome.
Just some light reading for you guys later, but so Tag Oil, I'm the CEO of Tag Oil. It's listed on the TSX under the symbol TAO. We have about a $35 million market cap, trade around 42 cents at the moment, and we're primarily focused on New Zealand, but have recently entered into Australia in the last while. Our focus is onshore to date. We do have skills offshore, but our focus has been primarily onshore. We operate all of our own assets, try and maintain high networking interests. Currently producing about 1,250 BOE per day. Generate about $1 million a month in free cash flow, which we're putting back into the ground at the moment. A snapshot on the company itself. 3.5 million roughly in cash in the bank. We just announced a $10 million revolving credit facility, which we can use for expansion or assets. It's currently undrawn. About 10 million in working capital. That's primarily oil inventory that's waiting to be sold. Generally a fairly tight capital structure. Good proved and probable reserves. We have 4.1 million BOE. This was done in March of 2017. So we expect not only technical revisions, but obviously economic revisions this year upwards in a positive manner. The really good thing about our asset base in New Zealand in particular is that we have an extremely high netbacks. We have a $34 a barrel break even, and that includes G&A. That's everything. That's all the coffee filters, the operations, the transport, etc. $34 US break even. So obviously at $70+ Brent, we're making good money. We've got a lot of opportunities to pursue, including infill opportunities, reperfs, infill wells, etc. So we can get after a number of these things as oil prices increase. We have 93,000 net acres in our portfolio. Most of that is held by mining licenses, so we don't need to worry about renewing those or doing work to keep those. Generally, like New Zealand and Australia, for the rule of law, fiscally attractive, generally politically stable, although lately that's changed a little bit, but fortunately we're all onshore and haven't been impacted by any of the New Zealand government's recent changes. Myself, geologist by background, spent 8 years in mining and oil and gas, did a business degree, ended up in London as a research analyst, spent 10 years in London, did a number of M&A assignments, board advisory, and was recruited to join Tag Oil to help clean it up in June of 2015. Henrik Lundin, he's our COO, reservoir engineer. He lives in New Zealand. He's very technically strong. Other directors to note is Keith Hill, he's CEO of Africa Oil and on our board, and Dave Bennett. Dave Bennett in particular has been responsible or involved in approximately 80% of the discoveries in New Zealand. So very key guy to have on our board and very well connected. You can see our production base, production stabilized over the last 12 quarters. A little blip here in fiscal quarter Q3 2018. We had some planned turnaround at that time, but as I mentioned, production's up around 1,250 BOE a day now, so we should see it rising going forward. Strong operating netbacks. You can see through the downturn, we were still making money, albeit just. Now, in this environment, we're starting to make more money, and that cash flow will pour back into our assets into the ground. Chile is our main producing area. We own it 100%. We have about 1,000 barrels a day of production out of here, and have a lot of running room actually to get after going forward. So we maintain an inventory of about 100 different things we can do. So we've got 3 to 5 years of easily pouring our money back into the field to increase production and increase cash flow. 39 wells drilled to date, 3D seismic, very good coverage, so have a really good understanding of the subsurface. We just, over the last 12 months, our primary focus has been on exploration and on water flood. And we've just, the reason we chose to do a water flood is we had a well pair called A3X, A4. The A4 well was a wastewater disposal well. Lo and behold, we managed to increase production, albeit not non-optimized, threefold over about a 48-month period, 4-year period. More importantly, declines stabilized and are much more are less aggressive. There are other analogies in the basin. We've seen responses in other fields of 2 to 3 times uplift in resource, and up to 2.5, 3 times production increases. So we're modeling a 2 times increase in production and a twofold, ideally twofold or greater increase in our reserves and resources going forward. Sorry, just to comment on this, we're just starting to see the initial pressure response on Cheel E, and expect that to grow over time here. So we believe it's working positively. Cardiff is a very large gas accumulation that sits below our Cheel field. It's very deep, very complex geology, substantial resource though, up to 3 TCF in place. We have not, and predecessor companies have not been able to crack the code on how to produce this. The gas is there. We've talked to other operators in the region, and we're working towards farming this out with a couple of parties that are interested. Ideally, we get this developed over time, because gas prices in New Zealand have been trending higher. They're in the $5 to $6 an MCF range, and from the looks of things, gas is undersupplied, and the gas supply is reduced, so the demand is increasing over time. Sidewinder, we produce about 250 barrels a day here. The primary thing with Sidewinder is we've got a lot of exploration acreage to the north. We just shot 2D seismic. In that 2D seismic, we're looking for further exploration targets to get after. Our Puka block, we drilled a large exploration well earlier this year with our partners Malvana. Unfortunately, the primary zone was unsuccessful. However, we discovered a secondary zone midway down a Mount Messenger zone. It looks like that we'll be able to produce that at some stage and recover our cash and the drilling costs there. Our Supplejack field is a gas field that we'll be putting on this year. It should produce at about 2.5 million cubic feet per day. It's immediately adjacent to a pipeline, and we can connect that without too much issue. Our first block in Australia was PL17. We picked up in 2017. Some very good CSG potential there. We recently shot 3D seismic over it in August of last year. Just got the processing results out of that. See some very interesting stuff at the Permian level along the trend. We like this area in the Surat Basin because there's good services. It's been generally underexplored for a long period of time relative to the western lobe of the basin, the Cooper. So in a nutshell, Tag Oil, we trade about 2.5 times cash flow at today's price deck. We've got a long running room. We expect to not only double production, double resources over the next while, but also add exploration acreage and grow through the drill bit. So happy to take any questions at the booth, booth number 9. I'll be around today and tomorrow, and if you have any questions, please come see me. Thanks.